And we've also told you for some weeks the government is close to revealing a surplus in this year's budget. Whether it does or not is important for the optics around the government's economic credibility. Finance Minister Katie Gallagher was out talking today. I caught up with her.
Short-term improvement is real, it's substantial, but the longer-term issues facing the budget, the structural issues, remain.
But one of Australia's most senior economic consultancies, Deloitte Access Economics, says the government will narrowly miss being in the black. Partner Stephen Smith joins me now from Canberra. Stephen, many thanks for your time. Yeah, the speculation as to whether it's there or not, does it really matter at the end of the day? Or is it really the optics and, if you like, the whole issue about confidence in the government if they can deliver a surplus?
Ross, what we do know is that there will be billions of additional dollars in tax revenue flowing into the budget over the next few years. Whether or not it's a small surplus or a small deficit really doesn't matter from an economic standpoint. It's a political test, really, if they can restrain from spending some of those extra dollars in this financial year and creep over into the black. But yeah, from the economy's point of view, a small surplus or a small deficit doesn't really matter either way.
One of the issues is when you see a 15% pay rise for aged care workers, justified, you might argue, over 4 years, but that then costs $11.3 billion. You realise that even small moves, small efforts to try and help people out in this budget really end up costing billions of dollars. That can be the difference between big surpluses or indeed, on the other side, increased debts for the Australian economy.
Yeah, absolutely. And we know from high commodity prices that there will be additional revenues, more than 80 to 90 billion in additional revenues flowing into the budget over the next 4 years. So the short-term position for the federal budget will actually look quite positive on Tuesday night. The issue is in the longer term. As you mentioned, aged care wages, NDIS, a range of other spending programs that are putting pressure on spending into the longer term. That's really where the story should be in terms of the budget, not in the short term.
So the other side of this is, in the longer term, though, it's not just that there's these extra costs that are coming from additional defence spending and also the cost of the NDIS blowing out, but there's also the prospect that there's less money coming through the door. You're not going to get the boom in commodity prices necessarily coming back anytime soon. And then if unemployment rises from 3.5% to 4.25%, as the Reserve Bank says it will, then you don't have tax revenue coming through the door.
That's right. The upside to revenue in the short term is really through company tax in particular, but also personal income tax as well. Those very high commodity prices are high both historically and relative to what Treasury was assuming in the October budget. Very conservative assumptions in that budget. And so, no great surprise that commodity prices are higher than what were expected by Treasury. What will be interesting, though, is over the medium to longer term, just to see where commodity prices settle. It looks very cyclical to us in terms of the near-term boost to revenue, whereas once commodity prices fall back, we have a company tax at more normal levels, we have unemployment at more normal levels. The structural issues in the budget are the medium to long term.